Among the upcoming elections, the threat of new wars, market variation, global pandemics, natural disasters, frequency increasing, see Milton, globalization, interconnectedness, it's really easy to feel off balance in the world. It's easy to feel insecure, stressed, and scared. And if you're a homeowner or have bought something in the last 5 to 10 years, you know guarantees are hard, if not impossible, to come by. Just check anyone who's dealt with any of the disasters from the hurricanes. And as Tommy Boy so eloquently said to Ted Nelson when he asked him, but why do they put a guarantee on the box? And Tommy said, because they know they all sold you a guaranteed piece of shit. That's all it is, isn't it? Hey, if you want me to take a dump in a box and mark it guaranteed, I will. It's crude, but funny, because it's true. Today, let's look at how you can guarantee your financial future and your legacy with no ifs, ands, or buts about it. So, the current financial chaos, this is a little bit grim, but think about the recent decades. Like, we've been off balance since 2020. But the financial world has been plagued by a series of tumultuous events starting back in 1913. It creates the perfect storm of chaos that profoundly affects people's lives, whether they lose their jobs, they lose their investments, their money, their homes. The economic instability erodes the trust in financial institutions. I just got off the phone with a 29-year-old and she said, you know, her generation is a lot more questioning of big corporations, the government, and other things, which I think is a great thing. Because individuals and families are grappling with unprecedented levels of uncertainty and insecurity. Specifically, the government, the Wall Street, and the banks have all put us in an economic downward spiral that we're facing today. We know, or we have a pretty good feeling that whichever way the election goes, we're going to find ourselves in some tumultuous times. And let's explore the facets of our current financial predicament, examine the causes, the consequences, and potential paths forward in this increasingly complex landscape. So let's look at the universal life insurance timeline, right? If we're looking at the universal side on the right on your screen, you can see this concept, like many other things, was born out of a problem. It was born out of one paper published who, if you guys remember, Unsafe at Any Speed, Ralph Nader, scathingly had it out for whole life, right? No other way to say it, but in 1970, I think it was 1979 or 1976, 85% of Americans believed and had whole life. Like our parents' generation. They believed in whole life. But then comes along this report, comes along Nader, and all of a sudden, it's the worst thing, and by 86, only 55% of Americans had whole life. But when we look, if we think about coming up with a new solution to a problem every time Wall Street or someone else comes up with a solution for our problem and we're not the one solving it, that's a problem. And we see that Universal was born in 1970. It got some traction in 76 with ULs. 80s, it becomes mainstream because of what I just shared about Nader. You know, 85, that's supposed to be VL or VUL. And then in 2008, the IUL started. So when we look, let's compare the two. Let's compare the stability of the two. An IUL, the oldest one, is 48. How do I know this? Because 76 is 2 years before I was born. So I was 2 when this shenanigans all started. And then if you look back at the first insurance company in the US, it started 265 years ago. All of the 5 companies, mutually owned, dividend-paying companies that we work with, are all between 119 and 170 years old. 70 years old. And the oldest one was in, I've written it down, but in 1835, right? Was the oldest mutual company that still exists. It's another name today, but it's still around. So a lot of stability versus solutions to problems that were caused by the people who are making the problems. It's kind of like I think Nelson Nash said it best, it's kind of like the fox guarding the hen house, right? Or the chicken coop. It doesn't make a lot of sense. It doesn't make a lot of sense to me. So when we think about these things, who do you want to be in control of your money? easy question, right? Guys, pop it in the chat. Who do you want to be in control of your money? If I'm answering, it's me. It ain't you or somebody else. I want to be in control of my money. Like, you want to be in control of your money. And so when we look at universal life, the first thing I always ask people is, no matter what the variation is, it's a VUL, an IUL, a UL, right? The other one, which it's not even around anymore. But in that example, the life insurance company is in control of that contract. And so what are some of the pitfalls, the uncertainty, the turmoil that you might experience if you have an IUL? And I'm not saying you will, because they can work. Sometimes they do work, but there's market dependency. It's dependent, the performance on the market, whether stocks go up or down. Like, think about a stock graph in your mind. It typically looks like this, but there's lots of ups and downs. The rising charges, right? Because you have term insurance inside these policies. And as you get older, it's more likely you're going to die. So guess what? Term insurance costs more. So this internal cost may increase and cause a little instability. Your premium issues, if you decide that you're going to pay less than you initially agreed because you've had changes in your life, and we all know change is pretty guaranteed, in that example, then the insufficient or paused premiums risk the policy lapsing. Or if you've pulled money out, if you actually have withdrawn, you can reduce the policy value, which impacts the long-term benefits. I'm going to go through a real example where someone thought they were protecting their family, and in the end, they found out that they needed to check their policy more often to understand more of what was happening, because in actuality, they had no control over how it was performing. Because when the company is not profitable, guess what? They're going to change some of the things to make it less profitable for you, but more profitable for them. So in the case of any UL policies, the insurance company is the one that is in control of how that policy performs and what is paid to the person that owns that contract. So not exactly full control. Right? If you guys are here watching this for the first time, make sure that you're learning as much as you can. Make sure that you're smashing the like button. Make sure that you're subscribing to the channel and ringing the little bell so it turns blue so you can be alerted to new content. I'm always grateful for anyone who's taken back control of their money by first doing what? Learning. Education is free, and you got to apply the knowledge for it to be meaningful to you. So let's look at some of the pitfalls of how a whole life can lapse. Right? The gentleman here, you guys are bankers, so you want to know, how can this go wrong, Jason? What is going to happen? And it's pretty easy. You're either not paying your premiums as required, you're not paying your base plus keeping your PUA attached, your paid up additions, or you've decided to be a dishonest banker, and hey, if you're a dishonest person, I'm probably not working with you. But just kind of letting you guys know, you don't want to steal the peas, as Nelson talked about. You don't want to take out a policy loan and not have a plan to pay it back. Whether you're paying it back in a structured way, like the banks want their money, which is often, consistent, and over a long period of time, or unstructured, meaning you're just paying back chunks here and there as you're getting windfalls or different cash flow is coming to you, or if the money's out working, or you're paying off higher interest things, then it is just paying the simple interest on the loan every year to keep it from eating the growth. So those are the only two ways that you're going to fail in a whole life policy. And why is that? Because it's a unilateral contract. It's between you and the company, but the company, the mutually owned company, is taking on all of the risk. They're taking on all of the risk, and they're basically telling you they're going to give you multiple guarantees. They're going to guarantee the interest on the contract, that the policy will always grow tax-free, uninterrupted compounding, and giving you access to that capital, right? It's going to grow over time, and there's a guaranteed death benefit. Now, when we're talking about banking, we're not usually talking about the death benefit, but it's always nice to know that we're protecting the ones that we love, the things that we love. One of the things I was researching, I thought was really curious, and one of the first whole life contracts, the reason the people got behind it is because the gentleman basically said, hey, I'm going to leave some of this to my family and the rest to a city that has X amount of people into it. And I thought, wow, that's cool. Like, this is someone that's really focused on the community. And that's what you're going to find with folks who are in the community, protecting their money, growing it guaranteed, and know that there's only two ways it can lapse. And if you don't know who that's going to mess it up, just go grab a mirror. Go borrow a mirror, go look at a mirror and just be like, hey, don't mess this up. I see you, right? That's the one person that can mess up your whole life is you. So make sure that when you're committing to paying yourself first, you understand what that looks like over the long term, which is part of where education and webinars like this come in, right? And let's look at some of the whole life insurance, the stability and assurances. I love this picture of the vault. It is a vault, right? Remember, he who controls the money gets to make the rules. That's Nelson's golden rule. So again, who do you want in control of your money? Pop it in the chat. Like, Kayla's new here. Welcome, Kayla. Pop it in the chat. Who wants to control, or do you want to be in control of your money? You. You want to control your money, right? And so as you pay your premiums that you've committed to over time, guess what happens? The net risk for your partner, the insurance company, the mutually owned dividend paying whole life company, gets reduced every time you make a premium deposit. And guess what else happens? Your cash value goes up and your death benefit goes up. It's a perfect partnership. Everyone thrives, and it seems too good to be true. I thought that, you thought that, you wouldn't be here if you didn't think that at some point, right? And so I mentioned this earlier, and at some point I'll share the actual article, but this is back when we had newspapers, before Kayla's time. Everyone else here is old enough to remember getting the newspaper. And remember, in USA Today, they had the little yellow section, which was the financial section. And so this is a cautionary tale of this grandmother who, at 67 years old, this woman, Lorraine, bought a UL policy in 1988. And it had a maturity age of 100. Today, maturity age is 121 because we're living longer, we're healthier. Maybe we're not healthier, but we're living longer. And at 97 years old, Thrivent, which was the company, the insurance company, told poor Lorraine, this grandmother, her cash value will dwindle to zero and her death benefit will be gone too, 3 years prior to her reaching 100. And when the agent questioned Thrivent, the response was there's no guarantee of coverage until the age of 100. Notices are sent to customers to let them know how long the policy will last based on the current premium, the current interest rates, the policy cost, and the cash value. And it went on to talk about how in a low interest environment, these cash values can change. And it said it's up to you, it went on to say it's up to you to regularly review and understand your insurance policy. And the final word from Thrivent, and this is all in this article, sounds like Lorraine and her family will need to devise a new plan to pay for her funeral. What? Are you kidding? Like, you talk about a slap in the face. You pay your premiums on point for 30 years. You're 97 years old, and because of all the variables in a UL and you not being in control of the contract and not understanding this fully, like, who really understands this fully? I've been doing this for 4 years. I've talked to 3,000 plus people. I own 4 of these myself, and there's still new things you're going to learn every day. So if you don't know it, you don't know it yet. But God, make sure that you are in control of this. Don't be like Lorraine. Like, that's awful. If you don't get angry at that, if you're not a little bit off at that, like, geez, like, you have to have something internally that's not having you feel, right? Like, that just made me mad when I saw that, so I want to make sure I shared that tale. And then let's look on the positive side at some of the guarantees in whole life. And when you are the controller. You are the person that has absolute ownership. You're number one in line. Nobody can tell you no for a loan or anything else. So you have what? You have guaranteed compounding, which I mentioned, right? A contractual guarantee that's tax-free. You have a guaranteed death benefit. That's a second contractual guarantee. You have guaranteed premiums. They're not going to rise as you get older, as you get unhealthier, or anything that happens, they're going to stay the same. They're actually going to reduce a little bit because of the different laws to keep this from looking like an investment. They're going to go down in the specially engineered whole life that we create for everyone. And it gives you control. You're in control of this. You have a guaranteed cash value. When you surrender a policy, guess what? The insurance company has to give you back the full cash value. You surrender, they say, okay, how much cash value is in here? And they give it to you, no questions asked. So they are the ones that are on the hook for the death benefit, the guaranteed interest, all the availability that you have. And I know I did put this on here. I thought twice about it, but you have the dividends. The dividends aren't guaranteed, but every single one of the 5 mutually owned, soon to be 6 mutually owned dividend paying whole life companies we partner with have never missed a dividend. Why? Because of the engineering. Engineers over engineer everything, right? They engineer everything to have a little bit of room for the risk. Like your car has a regulator, I forget what it's called at the moment, but you can only go so fast before it goes red line, but it could go a little faster, right? It could go a little faster, and it's the same with these policies. So every year, the dividend is actual return of premiums. It's when that company is profitable, and because everything is designed over and above what it needs to be, more conservative is what I'm saying, then these companies keep giving you a return of your premium. And people are like, yeah, but I'm just getting money back that I paid in already. And it's like, and where's the problem in that? Like you're getting a 3.25% guarantee or 2% guarantee or whatever the company's guarantee is, and they're going to give you back the money to where it's like 5 to 6%. Every year they're profitable, you get more. Every time that you're paying back loans, that's part of their profitability. So it's always an everyone thrives with lots of guarantees. And when we look at some of the whole life strengths, remember I was going through how ULs, how the different things, all of these things are the ways that UL can fail. And so with whole life, you have no rising cost. You have no reduced premium risk. You have no benefit increase risk. You have no insufficient premium risk. You have no cash withdrawal impact. And it's a stable, predictable growth. So these are some of the guaranteed strengths of a whole life. So looking at, would you want something that's guaranteed, as Tommy Boy said, or you want something that actually works the way it's supposed to work, right? And so when we look, one day, who here, good, give me some eyes if you think this is going to happen to you one day. Not anytime soon. You know, we got Halloween coming up, but one day we're not going to be here anymore, right? One day we're going to shuffle off and die, graduate, pass on, go over the rainbow bridge, or whatever you want to call it, however you want to talk about death. But one day we are guaranteed to no longer be here, right? That is guaranteed. So how do you want to protect your loved ones, your legacy, the things that you care about? You want something to be there for them. You want to pass this on to future generations. You want the guarantee. And again, if we go through this, the clear choice, when we're comparing anything that's out there as far as insuring your life, you know, yes, there's a place for term insurance. Yes, I prefer it to be convertible. But the clear choice when you're either protecting yourself or you're becoming your own banking system, you're privatizing banking, you're taking back control. Everyone that's here, everyone that's watching this, just think about who do you want to be in control of your money. You know, every week we're talking about how you can protect your family, how you can have control of your money, and providing education. So again, go ahead, hit the like button if you're first time seeing this, subscribe if you're new here, and click the little bell because it will turn blue, and that's fun. And so the clear choice is whole life. Peace of mind, unwavering security through generations. As long as you do what you've committed to do, the whole life company will do what they have guaranteed. Guaranteed growth, consistent growth. This is the only place where you have uninterrupted compounding interest year over year over year, and a guaranteed legacy. Again, stamped guaranteed. Love saying that word. So for everyone here, appreciate you being here. You know, the clear choice is to take back control of your financial situation. You can all schedule a free call with me at jason.beyourownbanker.com. jasonsipple.com/30, which is down below in the links. You guys can check that out. Everyone that's here, I appreciate you being here today. I'll see you the same time, 3 o'clock Eastern, next Thursday. Be blessed. Appreciate you being here and keep reaching out with your questions. All of you guys here today, it's fun to say, I work with each of you, helping you on your privatized banking journey. Frank's already in force, Chris is approved, and Kayla started today. So applause for all of you. This part won't be in the recording, but yes, Chris, I'll have this recording up on, you can either have it emailed to you as is, or it'll be edited and up on my YouTube channel next week. Appreciate you guys being here. Hope that was fun. I like guaranteeing and stamping things. So, and there we have it. When we look at today's current financial climate, when we look at the social, economic, even world weather forecasting, right, with Milton and Helene and all the things that have gone on, life is crazy. Life is guaranteed to change. So when everything feels chaotic, it's really hard for us to feel secure. It's really easy to feel a little bit stressed, a little bit worried. And we went through and showed you how you can take back control of your money, how you can be in charge of your money by changing just one thing. Who are you working with? Who are you contracting and putting your trust with? Or is it somewhere that has your best interests at heart and is going to make sure no matter what, that as long as you do the things that you've committed to, you will have a guaranteed contract. You have a guaranteed death benefit and you have a guaranteed legacy. It's an easy choice, and we get confused. We get confused because there's so much noise. There's so many talking financial heads, right, that are clowning around saying things that are just crazy. Like, yes, talk about Dave Ramsey, Susie Orman, and all the other people who are saying that what our grandparents did and their parents did and the generations before didn't know what they were doing. But I'm going to challenge that and say, let's go back to the basics. Let's go back to when we're in control of the money. Let's stamp things guaranteed. Let's have some fun doing it. And I'll see you all in the next video. So again, if you're new here, subscribe to the channel, smash that like button, and ring the little bell so it will turn blue and you'll get alerted to new content. Be blessed. I'll see you all in the next video.